So yeah, in the US and Europe, we continue to watch who's managing to bring down inflation the quickest, effectively. With the US being a bit further ahead and sort of like a dovish outlook to their sort of tightening policy, i.e. there's going to be less tightening in the future. We've seen a lot of dollar weakness. Perhaps this is a little bit overdone, like with sterling going through, okay, we're going through 130, euro sort of getting up to 112 levels, it feels a bit overbought. However, recently there's been, or over the last week, we've seen some very positive signs, particularly out of the UK in terms of CPI coming down. Having hiked 50 basis points, the Bank of England have now seen like genuine momentum in inflation coming down. So we're sort of looking for the dollar to gain some strength again, because the market will start to price in a more dovish tightening policy for Europe and the UK. I think the UK's sort of long-term highs in terms of policy rate have just been revised down about 75 bips when you price it in the market. So yeah, expect to see some dollar strength going forward. Cable, euro will be the casualties of that, but it's just repricing. Soon we're going to start looking at who's done too much. That's probably the next question. Like, are we going to see inflation dropping too quickly and central banks thinking we've done too much in terms of hiking and we need to revise our strategy quickly to stop a deflationary environment? But that will be probably for next year. So in Africa, I guess Nigeria and Kenya again are our big focuses, and that's where the most is going on. In Nigeria, parallel markets depreciated a good 10% over the past couple of weeks. It's just been one way. And the official window, again, low turnover volumes, there's not a lot of dollar supply. That's what's driving the rates higher in the parallel, because you've got all these dollar buys coming over. So we've seen the spread widen quite a bit between the parallel and the official rate. The question is when is the CBN or the Nigerian government going to act? There's been a monetary policy meeting announced for next week, so we're going to be monitoring that very closely. Are they going to try and hike rates to impose this monetary policy regime? Are they going to go down another route by, say, restricting that open market operations? It's yet to be seen, but they're going to have to make a move sooner rather than later, because this one-way movement in the parallel market is pretty unpalatable. Perhaps there's some question marks over Tinubu at the moment, the president. A lot of positivity around what he wants to do, what was pledged in his manifesto. However, the way that he's going about it is starting to raise a few eyebrows, declaring a state of emergency on food inflation, for example. Not food inflation, food producers. It's something which technically you can't do. It's you can only really declare a state of emergency for public security affairs. So there's a couple of moves he's been making where he's going to have to sort of back up what he's doing to keep the confidence in the market. In Kenya, I guess the long story short is very positive to have an IMF payout. However, it was relatively small in the grand scheme of things, and it's been somewhat outweighed by opposition protests on the streets. It's a pretty nasty scenario out there at the moment. Now, it won't threaten Ruto's presidential position. However, if he counteracts it aggressively with, say, more violence, then Kenya may lose some of the confidence of other international countries who are looking to support Kenya in their restabilization of the economy. If that happens, then we might have a more negative outlook on Kenya. But for the time being, depreciation has begun again. The Kenyan shilling having taken a pause for a while. The fiscal budget and hiking rates did have some effect, but they're probably going to have to do more to quell depreciation going forward.